Good morning, everyone. This is Corey Hinkle with your Ankerstar Wealth Daily Update. Today, we're going to look at CPI. What's inflation doing? We're going to talk about some new investment that Nvidia has made and kind of how that relates to some other things they've done. We'll kind of dig into that actually a little deep. And then we're going to look at something JP Morgan has just done in reaction to some private credit activity. And then, of course, you know me. We're going to look at financials today to see, are financials helping us? Are they hurting us? You know, I'm a little skeptical about their activity lately. Before I begin, I must remind you this is a financial education presentation. You must do your own due diligence before acting on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. Here we go. Here's that front page of CNBC. S&P mostly flat, right? Nothing crazy going on there. If we hop over to TradingView, TradingView actually has us up 0.08%. We are sitting right at that 670 level. We'd like to at least be above 6,800. I am actually, I hate to say it, and I'm always looking for those new highs. But the truth here is I am a little bit skeptical of this move, push back higher. I hate to say it. I want to see those new highs. That's great. But I'm just a little skeptical here. This is taking a very long time, going back to October, and we're looking in a little heavy, and financials are a little heavy. So I'm skeptical. But nonetheless, let's go look at CPI. Here's really only two things I wanted to tell you about this. The prices rose kind of as expected. Now we'll get to oil in a second. If we go look at the chart here, the chart didn't want to load. Well, let's refresh, but if the chart loads, there we go. You can see we were steady from last month, so no real change there. That's totally fine. And then if we go and look at, you might be wondering about oil. I liked what they mentioned here. Higher oil prices could complicate the inflation outlook in the coming months, as increases in gasoline and other energy products often filter through to transportation, shipping, and a wide range of consumer goods. So it's those second order effects that could raise prices for consumers there. Sustained gains in crude prices can quickly show up in headline inflation readings, even if underlying price pressure remains stable. Economists view such moves in, like what we're seeing in oil right now, as temporary and likely to abate once the Iran situation cools. Crude prices are well off their highs after briefly popping above $100 a barrel on Monday. So that's what I wanted to hit. There is a risk here if oil prices are persistently higher, but people are mostly looking through that for now, which is probably the right thing to do. I think push comes to shove, the government could find a solution there, but they've certainly stirred some stuff up for the time being, for sure. All right, hopping over to Nvidia. Nvidia makes a $2 billion investment in Nebius. So Nebius is an AI cloud company. We're going to talk a little more about Nebius. I'm going to teach you a little bit, and we're going to dig into some of this financing stuff. But the companies will collaborate on AI infrastructure deployment, fleet management, inference, and AI factory design. Okay. Now, Nvidia also has been doing some other things. So last week, Nvidia announced $2 billion deals or investments into Lumentum and Coherent. So 2 billion Lumentum, 2 billion Coherent. And then a significant investment yesterday into the Thinking Machines Lab, which is a multi-year strategic partnership. Now, what do all of these companies have in common? Nebius, Lumentum, Coherent, Thinking Machines Lab. All these companies are buying Nvidia chips, likely with this money. And then Nvidia invested $30 billion into OpenAI last month, $10 billion into Anthropic. What do those companies have in common? Those companies are also buying Nvidia chips. Now, here's the thing. These companies are doing this strategy, like if you want to call it that. They get this investment, or they use this investment to, at least in some, for we don't know exactly how the money gets split, right? They have payroll and all that, but they're using, let's say, a large portion, a majority of it, to buy Nvidia chips, which is obviously good for Nvidia. So Nvidia gives them money. They give Nvidia back some of the money to buy the chips. But then these companies are doing another thing where they go to the banks and they say, hey, banks, we have all these Nvidia chips and these are so valuable. We want to borrow money from the bank against using these Nvidia chips as collateral so we can buy more Nvidia chips. So you've got the kind of the vendor financing element from Nvidia, plus the chip collateral, debt element going on with the banks. And some people are skeptical. This is a little bit older article here from Jim Chanos, but here's what's going on. Emerging AI cloud computing companies looking to rival big tech in the market for artificial intelligence have secured large loans backed by Nvidia's graphics processing units, using that capital to buy more AI chips to scale up their operations. The firms lease space in data centers, fill them with AI hardware, and rent out computing power from that hardware for tech companies to train around artificial intelligence models. It is important to note that these chips, the rental rates are very high. So for right now, the demand element against these chips is very high. The financing is just really tough. Let's look at it. Let's look at Nebius. Would you loan money to Nebius? Nebius, you see the stock's up 50%. That's wonderful, and that's good for them. And in some cases, these companies will use their stock as collateral too. But I haven't read anything specific about that for Nebius. Okay, so let's go look at Nebius is, let's go look at the income. Let's look at annual income. Now you can see revenue. All right, so this is new operation, right? Revenue going from 2024 of 92 million, 2025 530 million. But as their revenue increases, their operating income gets worse and worse. So, okay. Does scale fix this? Well, we haven't seen that. They've been scaling aggressively. That hasn't fixed anything yet. So they're running it deep. They're running a deeply unprofitable company. Now, of course, they would tell you that, hey, we just need a runway to get there, which could very well be true. I'm not here to argue that. I'm just saying, for now, they're running a deeply unprofitable company. They needed cash, and Nvidia backed them up. Now, if you go check that balance sheet, obviously that cash that's rolling in, some of it's still sitting on their balance sheet. They're borrowing from banks, they're getting investments, so on. A lot of current assets, 4 billion. That's great. They do have a runway. A lot of those current assets are going into property, plant, and equipment. You can see property, plant, and equipment went from less than $1 billion to $6.5 billion from 2024 to the end of 2025. And, a lot of this property, plant, and equipment is going to be what? It's going to be Nvidia chips. It's going to be GPUs. So let's assume, let's be unfavorable here. Let's assume that these GPUs depreciate faster than they expect. Let's say in the next 2 years, they lose $4 billion of, value, let's say. So then you're really kind of you'd need to price in total assets of more like 8 billion, which is actually kind of all equal to their liabilities. So even with these massive cash injections, the balance sheet, if we want to be a little critical here, it's we'll say below average, and then you already know that they're deeply unprofitable and becoming more unprofitable as they scale. At least that's what the numbers tell us. They could tell us something different. Numbers and stories, it can sometimes be different. So I'd be a little skeptical here of Nebius. I mean, they are backed by Nvidia, and Nvidia does clearly have the money. It's just not what you want to see. So there's something called, yeah, this is what you want to watch out for. Companies using the chips as collateral, where they're basically taking on loan it's ish from either Nvidia or whatever. They're taking on initial loans and then they're taking on secondary loans by using the chips that they bought with the first loan to justify having assets to get a second loan. So it's a second layer of loan based on the chips that they've bought from the initial outlay of cash. And there are lots of financial institutions exposed to these things. So you could look at private credit firms, you could look at banks, but the banks are also tied to this. The banks loan money to private credit. So, banks loan additional money to private credit. They allow the private credit to kind of lever up a bit to loan out more than private credit loans to things like this in some cases. So the banks aren't immune to this. And we saw this actually today. JP Morgan reins in lending to private credit firms after marking down software loans. Basically JP Morgan, they are the industry standard. They're tightening the belt a little bit. Nothing crazy here. Again, is there a little smoke maybe, but no real fire of any kind. There is a lot of need for these companies, all these companies that you saw Nvidia making deals with. These companies need to reach profitability. They really do. And if they do, then everything will be totally fine. So that's kind of the next level of either the bull market or bear market potentially, right? Is what do these companies do? How quickly can they all reach profitability and so on? All right, now, you know me, I've been watching financials. Are financials doing better than the market? Are financials leading the market lower? Let's take a look. Looks like we got the financial group down 0.4% and the S&P 500 is flat to up on the day right now. That's not what we want to see. So I'm just a little bit skeptical. And if you watched me much on here, you know that I'll be the first one to say we expect new highs soon. I'm just feeling a little skeptical here based on what I'm seeing out of financials. So hopefully I am wrong. And of course, we don't invest on opinions or skepticism. We invest on process. But anyway, that's a market update for today. That's what we're seeing and thinking. Let me know if you have any thoughts or want me to address anything else. Hope everyone has a wonderful day.